This is King World News. I'm Eric King, and you're about to hear a King World News exclusive weekly wrap-up interview where each week we will have a different member of GATA sit in, and this week we have Chairman Bill Murphy. For more interviews, remember to go to our homepage at www.kingworldnews.com, where this week we have a terrific interview with Congressman Stearns discussing his exchange with former Treasury Secretary Henry Paulson. We also have John Malden, who authors the weekly Thoughts from the Front Line and Outside the Box, as well as Michael O'Higgins, well known for his Dogs of the Dow theory. Gold closed the week at $955 and silver near the $13.90 level. The Gold Bugs Index, or HUI, ended near the 360 area. Joining us now is Bill Murphy, chairman of GATA. Bill, you have focused on the price suppression, all of you have, for so many years on gold. And I just wanted to focus for a minute on how this affects the mining world. As you know, right now, there's very little exploration happening globally because companies are being so conservative with their cash. This is one of the results of price suppression, is it not?
Oh, yeah. And it is creating a problem because the companies can't make any money at these prices. Some can, but very, very few. And it's certainly not, they certainly cannot afford to go out and find gold. It's just not profitable. You're going to need prices of a minimum $1,500 for companies to be prosperous, and to go start from scratch, you need $2,000 gold.
You were telling me the other day that one of the CEOs of a company had mentioned to you $1,500. Do you mind talking about that?
Yeah, it was the CEO of Goldfields actually mentioned to a colleague of mine, and he said that's what it's going to take to really get them going, that there's just the margins are too small. You know, it's getting harder and harder to find ounces. The costs keep going up and up and up. That's the kind of price he said it would take to really make his company profitable, and many other ones in South Africa, and even in Canada. They've got, I know the people I know up there, they're making money, but very little, and it's not a very exciting business right now, even at $950 gold.
Isn't this, if you're the government, and Bill, you're price suppressing and you're doing all of these things, and we know, supply is going down and has been trending down for years now, and they're having to fill that void, right, or that chasm between the supply and what the demand is with central bank gold. And, from our talks we've had with Ian McDonald, we believe they're getting down somewhat to some kind of scrap type gold that's a little abnormal from what they were first sending to buy. I guess my question for you is, isn't this creating a headache or a problem for the government in the future in terms of future supply, meaning they're retarding the future supply by having this price as low as it is, are they not?
Well, yeah, there haven't been very many major discoveries in the last number of years. And, I call these people the gold cartel that's suppressing the price. They're getting into a period now where they got a big problem. They've been counting on European central bank sales for the last 10 years. Well, the last 2 weeks they were zero, and that's never happened before. And I think it means that the central bank sales by the Europeans are drying up, so that supply is going away. And the central bankers are, they're like sheeple. I call them sheeple. They don't want to be seen selling gold here. I think they know what's coming. And so the U.S. government's got a problem here of where they're going to get gold, which is why they're, desperately trying to get the IMF to dump some.
And they've been hounding the Germans for many years to get them to dump gold, and they just have resisted, have they not, Bill?
Well, we don't know. We believe that there's 1,700 tons of gold that years ago at West Point were swapped with the Germans. I don't think there's a big fight internally in Germany, but I think the Germans got their gold, but I think some of it's been swapped out, and what we've heard rumors of recently is the Germans want their gold back that they have here. In other words, they want it back on their own soil. And, of course, that's the big problem for the United States.
Do you get the feeling that the people in the gold industry on the mining side, having been through a long depression almost, we'll call it, certainly over a couple of decades, Bill, that when the price goes up, if it goes to 1,000, you don't have, because some of these guys are old timers, a lot of them are, right, Bill? So, and they are always just waiting for the next shoe to drop, which I think is why you're suggesting, or the Goldfields CEO is suggesting, you really need to clear the $1,000 level, and you need to significantly do it, because there's just a certain amount of pessimism that's inherent that people have when they go through a depression in an industry. Wouldn't you say?
Oh, yeah. And right now, Mike, what I call a cafe sentiment indicator, my website, this, for a high price, is the worst I've seen it in 10 years. There's almost no interest in the gold sector. Part of it's because of the lousy action, these junior stocks and exploration stocks. But everyone, and there's no bullishness out there. And you're right, when even these executives, it's going to go to 1,000 and then fall back. So we're going to need a price of $1,200, $1,300 gold before they're going to become comfortable that this thing's for real. And I think once we do get through 1,000, that's exactly what's going to happen. This time it's going to go through it and just, shoot up from there. But its sentiment is just awful. And here we are, $950 gold, up 9 years in a row. and you would think we were in the dumps.
What were a couple of interesting items this week in the gold world that you gentlemen have been posting, either over at GATA or La Metropole, Bill?
Well, the most fascinating thing was we said, we had this massive U.S. Treasury auctions, $235 billion, and everybody was talking about it. And we said, watch what they'll do. Because gold's related to interest rates. That's one of the reasons they rigged the price. They're going to take gold down. When the auctions are over, they'll go right back up. Doggone it. That's exactly what happened. They slaughtered gold a couple of days ago, and now it's right back challenging, ready to break out again to the upside. And, it's just so obvious. They did the same thing with the dollar. They propped it up a little bit, get their auctions done, and now it's starting to break down and and take out 78, which could send it cascading down to 72 in the weeks ahead. So it's just so obvious.
But let me ask you a question here about seasonality, because we're basically at the tail end of July as we're doing this interview. And normally you have the summer doldrums, is I guess where I'm heading with this, and the metals just kind of weaken and things just tend to weaken. But we just haven't seen that necessarily so far this year, have we?
Well, I'm just writing for my commentary. The last 3 weeks ago, gold fell down to the $908 area or something, and it came right back up quickly. That almost never happens. And now it's done it, not just that took 3 weeks. Now it's come back in a matter of days. And I think this combination of what we've seen here it tells us the gold cartel's in trouble. They got it down for the auction. And now you're going to have people piling in. As you say, this is coming into the seasonal time for gold. The Indians have come back into the market. This is traditionally when they buy. So I think you've got a combination of things that are going to develop in the weeks ahead will send gold and silver much, much higher. I'm still, the heck with what the Dow is doing in the stock market. I think things are still terrible out there from what I see, all the anecdotal stuff that's coming my way. And I think you're going to see some real problems develop in the weeks to months, and you're going to see a crisis bid come back into the gold and silver market.
When I was speaking to Ian, again, we're getting back to Dubai, but Don Cox talked about this, the fact that they had cooked up or concocted, not Dubai, but the government, that they would come in and intervene and collapse a lot of these things down, and the way that they did it, and then the destruction it caused on the commodity side, et cetera, was sort of has become legendary. But I think the idea might have been that if we can collapse gold and silver down, that we might be able to get people either disinterested in the market or even dishoarding. And I remember speaking to Ian about this because it was being reported, as you know, Bill, when we were down near the lows, that buy orders versus sell orders were 99-1. Well, the same thing was happening in Dubai, and he kept getting calls every day, all day. And I said, well, to find out who's buying. And I said, well, who is it that's calling you? And he said, it's bankers from New York. And I thought that was very interesting because they were trying to pinpoint, because they were saying, who is doing all of this buying? Now, presumably to strong arm whoever it was and get him to knock it off if it was, somebody out of Saudi Arabia, or if they could try to pinpoint a couple of people. But, Ian was telling them, it's everybody, and it's from all over the globe. People are just trading in their paper for the real thing. Mm-hmm. So that little assault, meaning when you're messing with the natural order of a market like that, Bill, and you're going against Mother Nature, and you're trying to rig things, it just doesn't work the way you think it works when you sit around in a boardroom and cook this stuff up, does it?
Well, eventually, and then the key is the physical market. There's a supply-demand deficit that's extreme. It's well over 1,000 tons of gold. They're running out of supply. So they've had this strategy over and over again. They've been doing the same thing for years. But when they start hitting the wall, we recently discussed about physical supply, they're in the deepest of trouble. And I think what you're talking about, that's why this David Einhorn, this famous investor here in the States, took his $300 million out of the GLD, which is a very suspicious gold holding entity, and put it into physical bullion that he owns himself, that he has his hands on.
Well, thank you so much, Bill, for joining us.
My pleasure. Anytime, Eric.
If people, by the way, before we let you go, want to go to your site, it's lametropolecafe.com, and then there's gata.org. Is that right?
Yeah, and they can, if they want to go to my site, I write about the gold market every day, and there's other financial stuff. They can sign up for a 2-week free trial. If they like it, they can go from there.
Now, that was what Eric Sprott, though, up in Canada, who manages about $4 billion, was saying he reads every day, right?
Yeah, he's been one of our biggest supporters, and there's no smarter guy around than Eric Sprott, so we're proud to have him in our camp. He came up to Gold Rush 21 all the way in Dawson City, and he's been behind us for many years, and we hope we've been some help to him.
Okay, again, so if people want to go sign up for a free 2-week trial, lametropolcafe.com. Thank you so much, Bill.
My pleasure, Eric.
Thank you for joining us at kingworldnews.com. Remember to go to our homepage for more interviews, and be sure to tune in next week for another great show where we will have part 2 of John Malden's interview, plus more outstanding guests. For more KWN exclusive interviews, you can go to our business page and our Gold Plus page. On the Gold Plus page, we have exclusive weekly interviews with Ted Butler and a distinguished member from GATA.